Okay. So previously we have just completed the filing requirements and the basic details about the 1040 return and what all things are, the sequence of the lectures and everything we have discussed yesterday. Today we are going to start with the filing status, most important topic of our part 1, right? So if you are aware about all the filing status, next all topics will be quite easier because that will have a little bit about filing status. Just a minute. Huh? Okay. Say or is legally separated. Okay, so this two situation you need to check on 31st of December, exactly on the last day of the year, because when you're filing the return, you're filing it for the annual period, right? Married, whether he was they can go for a joint return, that is 31st of December. If a person is married, they can't file as a single. They can either file as a married filing jointly or married filing separately. Okay, they can't go for the single filing status. In order to file a joint return, the parties must be married at the time of, at the time of 31st December. You can just remember this thing. The parties must be married at the end of the year. They should be living living apart. They are not living in together. Still they can go for a MFJ status. Only thing you need to check is, as on 31st December, is their marriage valid? Are they married or not? Okay, that's it. So if they are married during the year, a joint return may be filed provided the parties are married at the year end. Okay, 31st December. If okay, see, if divorce is still going on, it is not legally executed, there is a difference. Okay, it has to be legally executed for making it valid for not filing a joint return. Clear, guys? Second is, if one spouse dies during the year, they can go for joint return. Okay, guys, please mute yourself, everyone. Once you have any doubt, queries, you can unmute and ask. Okay, see, if one spouse dies, this we will again see in the next topic, that is surviving spouse topic. Let's say spouse dies in the month of October. Okay, let's assume this. So the taxpayer will have to file a joint return. Joint return. Okay, that is MFJ return at the end of the year with the deceased spouse. What is the logic behind this? During the whole year, the taxpayer was married, right? It doesn't matter that at the end on 31st December, the spouse is not there, the spouse is died, okay, deceased. So what you need to remember, in the year of that, they will be filing a MFJ return. If this taxpayer has not remarried someone else, okay, let's say he has remarried someone else in the month of December. So as on 31st December, can I say his marital status is married? So he will be filing a separate return. Okay, clear, guys? When a person when there is a death of a person, we need to file a final return, that we will see in the last chapter. Whenever the spouse going to file a MFG return, you need to check the marital status. If in case one of the spouse dies, okay, is deceased, the or she has not remarried again to someone else. Okay. After that, after this return has been filed, they will be filing qualifying surviving spouse status for 2 years. If for next 2 years also still he or she is unmarried, okay, they can go with the QSS status. After this, after taking the QSS status for 2 years, they need to check the criteria. If they are fulfilling the criteria of head of household, they can go for that status, else they will again be filing as a single. Clear, guys, everyone? Any question, any confusion? This sequence you should remember. Mainly in exam they can ask the questions on this timeline. Okay, let's say that person died in the year 2022, so for 2024 what should be the filing status of the taxpayer? Okay, so for 2022, the year of death, that will be a MFJ. In next 2 years, that is 23 24, we will assume a QSS status. Okay, we will see the QSS status criteria. Based on that, it is allowed. Okay, if it is not fulfilled, no need to take QSS straight away. Single filing status will come into picture. Okay, now let's look at the next criteria. A joint return is not allowed if one spouse was non-resident and at any time during the tax year. Right? Let's say a taxpayer is a resident, spouse is a non-resident. So they are not allowed to go for a joint return unless the US citizen and NRS spouse elect and agree to tax on a worldwide income. What will happen? Let's say I am non-resident, okay, but my husband is a resident in US country. So he is mentioning his income in his 1040 return, and I am going to be considered as filing a MFJ return with him. But since I'm a non-resident, what are the rules for the non-resident? Only US source income is taxable for me. Okay, but if I mutually agree that no, I need to file a MFJ return, all the source income, worldwide income, my Indian income, my US source income, everything will be taxable in this 1040 return. Clear, guys? So this is the situation. Like, it depends on whether the spouse and taxpayer are agreeing to file the MFJ return or not, even if one of them is a non-resident. Generally, if one spouse files separately, so must the other. Okay, an exception to this is if other spouse qualifies for HOH while married, then one spouse may file a separate and other may file as a HOH. Right? So when we'll see the HOH status, if you right, if you are married and one of the taxpayer is fulfilling the criteria of see the head of household criteria, there is one criteria, the person should be unmarried. Then how this criteria will fit into picture? If both taxpayer and spouse are living apart since last 6 months of the tax year, then he is eligible to go for HOH or she is eligible to go for HOH. Okay, it can be either. But if one is going to have a HOH status, another will file single status only, not as a MFJ. Okay, they will have to file a separate return. They have to file a MFS, sorry, not single, MFS, because they are married as on the date of last day of the year. So she can't go for single, but she can go for a MFS status if he is opting for a HOH. Right? Any question, guys? Anyone? Yes.
Yes, Siddhi.
Yeah, tell me.
So above you have mentioned that if spouse is living for another country, and you give the example of filing return of your husband in US,
Mhm.
and you both mutually agree to file joint return. But what if wife is from another country, like say for India, so she need to file her return in US also and in India also.
Yes. In India, she will take the credit of whatever taxes she has paid in other countries.
Okay. Got it.
Okay. Yes, any other? Neha, I think you were having some question. Ayush, any question? Okay. So next one is once a joint return has been filed for the year and the time for filing the return of either spouse has expired, now the spouse may not amend the return as a MFS status. See, you can amend the return n number of times. 1040 returns can be amended n number of times, but the reason for amending should not be for changing the filing status. Yes, you can change the filing status from single to MFJ. Okay, it can be due to mistakenly you filed as a single, you were married but you filed as a single. But from MFJ you can't shift to MFS. This status cannot be changed to MFS by filing an amended return. This is the one condition for, this is one exception for amending the return. Okay, rest n number of times you can amend it for n number of reasons, but only except this it should be amended. Okay, apart from this it can be amended for any reason. Clear, guys? Now married individuals who file a separate return may later file a joint. See, as I mentioned, MFJ cannot file MFS, but MFS can go for MFJ. Okay, payment of entire joint tax liability is not required at the time of amending the return. Amended return is filed. Means what will happen if they are filing MFS? Taxpayer, spouse, both have filed a MFS return. Okay, they might have separately paid the taxes. Now they are again amending the both the tax return and filing a MFJ, a single return. So already the taxes are paid. They don't have to again pay the taxes. They are just merging the two returns. Okay, they will be getting the higher benefit of standard deduction. If they are going opting for standard deduction, they will get a higher standard deduction. Okay, we have seen yesterday the limits of standard deduction. There you will observe, you might have observed that in case of MFJ, the standard deduction limit is higher. 27,700 instead of MFS. Okay, 13,850, 13,850. Instead of that, they will get a joint standard deduction. Okay, just a minute. Okay. See, in case of filing status, once all the criteria is financial okay, if in case one of the spouse dies in the middle of the year, still they will be filing a MFG. Okay, third thing regarding is going to file a tax return with the non-resident spouse, they have to mutually agree. If he or she is going to agree, being a non-resident return, all the income, worldwide income, will be taxable on the 1040 return. Okay, and once the joint return is filed, they can't amend and amend.
Is anyone speaking? Yeah, why is it not audible?
Yeah, I think we lost her.
Siddhi,
Hello,
Yes,
am I
Siddhi.
audible?
Yes.
Yes. Actually, there was issue in internet. I changed the connection. So let me share my screen again. Okay. So see, uh, when a return is filed jointly, taxpayer and spouse both are going to be liable equally for the whole liability. Okay, so joint return is signed by both the spouse. Generally, the spouse are jointly and severally liable. Okay, now one spouse may be relieved of the joint liability. It can happen that one spouse has not uh, uh, you know has not incurred any liability, or one spouse is not aware about few interest and penalty which might apply. Okay, so he or she can be saved by filing a injured spouse relief, okay, or a innocent spouse relief. Please understand, these two terminologies are having between them. Whenever a spouse is going to file a joint return, he or she is equally and severally liable for all the taxes, all the penalties, all the interest that can come in future. Okay, let's say they filed a tax return, taxpayer taxpayer plus spouse, they filed a return. Okay, now taxpayer had some gambling winnings and he didn't report it in the 1040 return because they are going to jointly file. Sorry, jointly. So what happens is, this gambling income, he doesn't want to disclose it to the spouse, so he didn't involve the huge amount of winnings in his 1040 return. Now, after few months, let's say IRS sent a notice that your 1040 return doesn't include X amount of winnings in the return. So she said that there might be a mistake. We didn't had any gambling income. And that point of time, he is only liable to pay the tax on that gambling income. She can't be held severally liable. Means this is an example of anything which a spouse is not aware of, right? Still, there is a notice on those income. She can apply for innocent. Innocent means she doesn't know about this income. So innocent spouse relief will be applicable in this situation. Okay, clear guys? So let's read it once and then link the example. See, generally both spouses are responsible for paying the full amount of tax, interest, penalties due on the joint return. If qualified for innocent spouse relief, tax part or all of the joint liability. So she is relieved of the taxes, interest on the gambling winnings. What is the requirement for filing the innocent spouse relief? An understatement of tax. Okay, because the spouse omitted the income, it's an innocent taxpayer was not aware about the understatement. Clear guys? The innocent spouse is totally unaware about the understatement of this income, or let's say the person has wrongly claimed the credit, or the person has wrongly taken the deductions, right? So this can be the scenario for filing an innocent spouse relief. An understatement of tax, an innocent taxpayer is divorced or otherwise no longer living with the spouse, right? This can also happen that in 2020 tax year, they were married, they were filing a joint return. Okay, now in maybe in 2023, they received a notice for something which was understated in 2020 tax return. But now they are unmarried, and even she is not responsible for those income. Okay, so here also she can go for innocent spouse relief. So mainly the maximum of the cases for innocent spouse relief is this situation. While marriage, they might have incurred some tax liability, but which was not properly paid to the IRS. After the divorce, if some IRS notices will come into picture, the responsibility, the authority for that, they are going to an attorney, to ask them whether I am responsible or my spouse is responsible. Okay, but meanwhile, whatever is the amount mentioned in the IRS notice, someone should pay on time, else interest penalties will keep on accumulating on those things. Okay, so see, simple thing is you just need to remember the example of that gambling winnings, and that point of time you will file a innocent spouse relief. Right now, what do you mean by injured spouse relief? Let me tell you one example. Being professional, okay, and spouse is household worker, like she is not working and not earning at all. What will happen when they file a joint return? Okay, let's say she has some deposits, some earnings from interest, dividend, all the passive income she's having. She's not having any active income. But since you are going to file a 1040 MFG return, all the income, okay, taxpayer plus spouse, all the income will accumulate and all the liabilities will be calculated in total, and you are going to get a reduction of withholding taxes. Now, he is working professional, his taxes are withheld by the employer. His withholding will also be applied against the wife income also. Okay, so she is going to get a benefit of withholding taxes, which was paid by taxpayer with his W2 income. Right? She is not earning the W2. She is not going to have any withholding. Still, she is going to get the benefit of that. So what does this injured spouse says that taxpayer is going to file a injured spouse relief to mention that his withholding will be applied against his income only, not against his spouse income. And this also happens in the case of divorce. Okay, let's say they are going to file a return, joint return, a last MFG return they are filing. Like let's say on 2nd of January they are divorced, okay, but on 31st December they were married. And to get a benefit, since still they are in the good terms and conditions, they are going to file a MFG return. That's why taxpayer is going to file a injured spouse and mentioning the IRS that my withholding taxes should be applied against my income only, not against my spouse income. Clear, guys? Any question, any confusion between innocent spouse and injured spouse? The terms itself, yeah. Tell me.
Siddhi, so
Yes.
this qualifying, innocent relief or this injured, when we need to disclose to IRS, like at the time of filing return or at the time of amendment?
No. At the time of filing the return, also you can go for this 2 forms, or even after filing the return, you can time you can file this. You just need to mention the year for which you're filing injured spouse and innocent spouse. There is no time limit for this. See, if you receive, once you receive the notice also, then also you can go for this. Because in injured spouse, you don't know only that this income is not included.
Correct.
So when you receive notice, you can straight away file for innocent spouse relief. Okay?
Okay. Yeah.
And injured spouse relief can also be filed at any time. And let's say after divorce, the taxpayer feels like my half of the refund is taken by her in the as an alimony. So he will immediately file an injured spouse relief to segregate the refund before the refund is credited in the bank account. See, if it is already credited in your joint bank account, then IRS can't do anything. You have to mutually sort out the division of those refund amount. Before getting the refund credited in your bank account, you should go for the injured spouse relief. Okay. So what is the qualified event for injured spouse? They should be filing a MFG return, okay, to segregate your withholding. See, if you're filing MFS, you're automatically going to have your own withholding with yourself. Generally, what happens in practical life, no one goes for injured spouse. Instead, they are going to pre-decide, okay, if they are going to have a divorce and they have 15th April, okay, before 15, from 1st of Jan till 15th April, if the divorce agreement is already going on, they will, from that date only, they'll file a separate return, MFS, married filing separate. So they will have their own liabilities, own income in their own return. But if something happens and it was not pre-decided, okay, in a very rare situation, they can go for injured spouse relief. And trust me guys, for receiving the approval for injured spouse relief, it is very difficult. Like, it takes a long time. That's why many people doesn't go for injured spouse relief. Yeah, innocent spouse relief, still it can be a little bit faster as compared to the injured spouse relief. Okay, file a joint return, have a reported income. They should have a reported income on their return. So third thing is, have made and reported tax payment. Okay, already the withholding has been done and they want to apply that withholding against their own income. So withholding should be there. And the fourth one is not required to pay a past due amount. Okay, once you file this injured spouse relief, you don't have to pay any past due amount. Okay, any past due amount is still, if you receive a notice from IRS why you have not paid this amount, or why you have not justified the amount, you can mention in response. See, after becoming EA, you should, I'm doing the same thing actually right now. I used to create some cases, like what can be the situations in the client. Okay, it's a kind of case study. So if this thing happens in any of the client's tax return, if they receive this kind of notice, what should be the response to that? Right? So if once your injured spouse relief has been filed, they have not received the intimation for that, and still you're receiving the notice for paying the past due amount. Okay, why you should pay the past due amount while you are having enough withholding, but your a part of the withholding is applied to your spouse income, spouse passive income. So you will create a reply accordingly that already this form has been filed, and you should attach the acknowledgement whenever you file any return. Okay, you receive an acknowledgement receipt for that, right? So file form 8379, here 8379 form will be used. Got it guys? Any question, anyone? MFJ is very simple. There won't be any complex question from this. Only these two are important. Just understand the segregation, differentiation between these two things, because there is a very minute difference. Some person can go for innocent spouse relief. There are different condition. Injured spouse relief has a very different condition. Okay, clear? Now next is MFS. Being
One
yes,
question.
Akash.
So, this innocent spouse relief, do we have any form to file?
Ashok, yes, tell me.
So, this innocent spouse relief, do we have any form to file? Like, we are having 8379 for injured spouse, right?
Innocent spouse relief also we have a innocent. It's 8857 actually. I forgot to mention over here. You can just remember. Five seven. Okay, this is for innocent spouse, and 8379 is for injured spouse. Okay, so the form numbers are actually not required for the exams. Wherever it is required, I'll mention it. This you can keep for your reference. Yes, Akash, you have raised hand.
Uh, tax is withhold. So what the the spouse has to pay the tax, and the taxpayer will get the refund of the amount withheld.
Yes, if they go for injured spouse relief. Some capital gain also, all those things. She's not having active income. She's not actively involved. Only her husband's investments are being used, okay, for example, and she's earning in her name uh $10,000. Okay, so this is still within the limit of basic exemption. Let's take 20,000.
Hello. Is she audible?
Oh,
He is
no.
not audible.
Hello. Am I audible now, guys? My internet
Yes.
is having some,
Yes.
probably the Wi-Fi is not working. Also, the hotspot is not working properly. Okay, so the question was, I think someone asked the question regarding, I was taking a numerical example. Wait, let me share my screen. Yeah. So let's say spouse is going to earn only 20,000 and this whole 20,000 is out of the passive income. And the taxpayer is going to earn $30,000. $30,000. Okay. Out of that, his withholding are, let's say, 12,000. Okay. So this 12,000 is applied on whole $50,000 minus 12,000. Whatever is the remaining amount, okay, this is liable for the tax. But what the taxpayer says, I don't want the this withholding to be applied on both the income. I need that whole 12,000 should be applied against 30,000, and whatever is remaining, and she should be liable for, she should not be given any withholding benefit. Okay. So once, let's say you have already filed the return, already paid the taxes and everything is done. So you are going to amend the return, file the injured spouse relief. Okay. And he is going to have a refund and she will have to pay the extra taxes. Okay. This thing can happen, but usually this will take time. So what happens in practical life, they mutually understand, they mutually will prepare a dummy return. They'll consult some CP or EA and they will ask them to prepare a return where his withholding should not be applied to her, and they'll mutually agree in that divorce agreement, okay, that she will pay her this much amount, him this much amount, or XYZ amount will be paid in the form of alimony. Okay. So that is the one situation. Else they can go in the court settlement situation where they want the application of withholding in their own income only. These are the two scenarios. Okay.
So
For
injured
their,
spouse,
yeah.
so injured spouse is applicable only in the passive income, or it can be applicable on active income also?
Any income, on active income also. Let's say she's earning active income but not that much as compared to the taxpayer, still he
Okay.
can go for it.
Okay. Okay.
Now next one is MFS, married filing separately. Just like a MFJ or single, you just need to check a marital status, okay, on 31st December. So we know the person is married on 31st December. If they feel like they want to go for a separate return, they want to apply their withholding to their own income, okay, they want to mention their own act, not in the combination, they can go for it. Only thing is, when you go for MFS, there are so many benefits which are disallowed. If you're going to file credits, some benefits which are being a married filing joint return. But if you're going to file a MFS return, there can be certain credits Okay, certain deductions which will be disallowed. When we are going to do the credits chapter, when we are going to do the deductions and income exclusion topic, there in the conditions, it will be mentioned that if you're filing MFS, you will not be allowed this credit, right? So let me just quickly share you what all things are disallowed if you're going to file MFJ. It is mentioned in your summary book. First chapter. See, will not be allowed. But yes, if employer is providing some childcare assistance, then that is allowed. So there is a very minute difference. When we'll do the child tax credit, child and dependent credit, I'll explain that thing again. If you're going to go for a MFS status, you will not be allowed a child and dependent care credit. You will not be allowed for a EIC. Okay, except for separated spouse. Separated means if both the taxpayer and spouse are legally separated. Legally separated means they are going to file a single return. MFS return will not be allowed. Still, they are married, they are not separated, they can't get a EIC credit. Okay, right now I'm not explaining the criteria of credit. The next chapter, when we'll do the credit, you will understand that. Credit for adoption, you will not get. Education credit, you will not get. Exclusion of interest income. If you have taken a EE series bond, you can get an exclusion of all the interest income if you're using that interest income for education purpose. But being a MFS filing status person, you will not get that. Child tax and retirement saving contribution credit, whatever is the amount, you will straight away get the half of the total. Here also, in some of the situation, you will get the 50% of the credit. When we'll do this individual credits, you will understand that. Okay, capital loss. Whenever we have a capital gain, the capital loss can offset against this capital gain. Whatever is remaining capital loss up to $3,000 can be offset against ordinary income. Okay, so this $3,000 will become $1,500 if you're filing a MFS status. Now, one spouse can itemize deduction, other spouse will also have to itemize it. Both the person cannot go for a standard, different deduction status. If the spouse is itemizing, the other should also itemize. If the spouse is taking the standard deduction, the other should also take the standard deduction. Okay, now deduction for student loan interest, when they are going to have an education loan, okay, they will get a adjustment to income for a particular amount. That adjustment to income will be allowed for the interest payment on student loan if you are going to file a MFJ return. And if the person is married, the person is married and they go for MFS return, they'll not get that benefit of taking the deduction. Clear, guys? So these are the conditions which will be, disallowed if you're going to file a MFS return. And it's very simple that if you're going to file a MFS return, all the incomes, all the credits, every his own return, but let's say credits are there, some of the credits. So let's example capital expenditure, capital loss is there. So 1,500 in the taxpayer's return, and for spouse 1,500 will be considered. Clear, guys? Okay, now next one is the most important part, that is qualifying surviving spouse status. Who can claim this status? If a person it can taxpayer is going to have a MFJ return. Just after that, let's say the spouse died or the taxpayer died, they are going to file a QSS in the next year. Okay, in the year of death, we have seen that the MFJ will be considered. But there is a condition. For filing QSS, the spouse should be having a dependent child. And this child should be their own child. Okay, it should not be any cousin or anyone else child whom you are taking care of. It taxpayer or spouse, one of them should be the biological parent of that child. Okay, then it will be considered for the qualifying surviving spouse status. Okay, so for the 2 years after the spouse death, a qualifying widower is a taxpayer who may use this joint return standard deduction and rates for 2 taxable year. So if you have seen the previous table of standard deduction, QSS standard deduction and MFJ standard deduction both are same. So she can still get the benefit of higher deduction for next 2 years by filing a QSS. Okay, so only thing you have of the surviving uh, one thing which you need to remember, that is this very minute difference between QSS and dependent.
Yeah, Siddhi, but I think yeah.
The taxpayer is diseased, plus he or she is having a dependent child, and that child should be living for full year. Okay, here the dependent child should be living for more than 50% of the year, more than half of the year. Here it should be full year, except few conditions are allowed, that let's say the dependent is living at in the hostel, or taking some higher education from other location, so that can be one exclusion. Second, due to the hospitality, he or she is admitted to hospital. Due to that reason, we can take this as an exemption for the full year residency. Okay, but remember one thing, in case of qualifying widower, it's very simple. The child should be their own. Second, the child should be living for the full year. And third, more than half of the cost of living should be maintained by the surviving spouse. Okay, so surviving spouse must pay over half of the cost of maintaining the household where the dependent child lives for whole tax year. Now it can happen that the taxpayer and spouse are, let's say, more than 40 years. They are still claiming the child who is around 22 years as a dependent on their tax return. Now taxpayer died, spouse is not earning anything. She is using the taxpayer's earning only to spend all the expenses and all. And on the other hand, child is earning very well. He started the job, he started working, he's earning very well. And he is incurring all the household expenses. Okay, so if this is the situation, she cannot go for QSS status, because the last line mentions that if child is going to incur the expenses, okay, of the household, then it is not allowed to go for a QSS status. She is not allowed to go for QSS status in this situation. If he is not incurring any expense, she is incurring even out of the savings, then also it's fine, but she should be incurring the expenses. Okay, see, in practical life, no one is going to go and check that from where you're paying the utility bills. Is she paying from her saving, or is the child is going to pay it? This is the duty of the EA or CPA who is going to file the return, to send them the checklist, to send them the questionnaire, okay, to verify who actually is incurring the household expenses. And based on that, he is responsible to selecting the proper filing status. Okay, if he intend in by by wrong intentionally, he selected the wrong filing status, IRS will send a notice to CPA or EA also, and also to the taxpayer. Okay, and they will have to justify themselves. They can either say that we didn't had enough information and all. So this justification, this reply, you will able to understand when we do the part 3. Okay, in part 3, the do's and don'ts are given in that syllabus. So right now, just keep yourself limited to the criterias. What are the criterias? What you need to do while filing the QSS status. Same way for HOH. Now, HOH is very important. Whenever you're going to file a HOH, you need to understand the criteria. Person should be unmarried or considered unmarried. See, here the taxpayer is deceased or considered deceased, can't be considered. It actually has to be deceased only. Your spouse, taxpayer should be deceased only. But in case of HOH, if a person is unmarried or considered unmarried means what? Since last 6 months of the tax year, if taxpayer and spouse are living in a separate house, they are living separately, they are living apart since last 6 months, then he can go for a HOH. But the other person will have to go for a MFS status. If she is going to go for HOH, the other person will go for MFS. Let's say they have signed a divorce agreement, but it is not yet finalized. Okay, still the divorce settlement case is not yet finalized. It is going on since so many months. Okay, and the child is living with the spouse. So she is eligible for filing HOH and he will be filing a MFS until the divorce decree is finalized. Once the divorce decree is finalized, she can still continue to be filing as an HOH because she will now fall under the definition of unmarried. And he will have to go for a single filing status instead of MFS. Clear, guys? So this kind of, case scenario kind of questions can come in exam, that Mr. X, Mr. Y, like we'll give some names also probably. So you will have to figure out the criteria. If you know the criteria very well, there won't be any issue in selecting the proper answer, and it's already MCQ based exam. So there won't be any descriptive or anything to be mentioned. Okay, so HOH status entitles certain taxpayer to pay lower taxes. Even HOH deductions are higher than MFS or single, but lower than the MFJ. So MFJ filing status will have a highest benefit of standard deduction. Okay, and then the next highest is the HOH deduction. Okay, MFJ and QSS, the standard deduction are exactly the same, 27,700. Then comes is HOH. Okay, clear, guys? So next one is in HOH status, you just need to remember the qualification criteria. The individual must be unmarried or legally separated or married but is living apart from his or her spouse for the last 6 months of the year. Okay, the individual is not a QSS. See, if you are going to file a QSS, it has to be followed for the next 2 years compulsorily. You cannot say that I want to go for HOH. Okay, except where you are not fulfilling the QSS status. Let's say you have a dependent, but that dependent child. So can I say you are unmarried plus you are having a dependent, then you can go for HOH status. But if you are already eligible for QSS, you can't take the benefit of HOH status. Okay, why someone will take this status? Because standard deductions are higher in QSS anyways. Why someone will take a lower standard deduction? Okay, individual is a non-resident, then they can't go for HOH status. Individual maintains as his or her household that for more than half of the taxable year is the principal resident of qualifying person. Here they have used the word qualifying person, not qualifying child. So what does the qualifying person means? It can be a dependent child, it can be a dependent parent, or any dependent relative. In the next topic here, the definition of dependent child and dependent relative is mentioned. So specifically, this definition will apply only for HOH filing status. Okay, clear, guys? Any question till now? Okay, so see, a qualifying child will basically include child, stepchild, legally adopted child, foster child, brother, sister, descendant of any of them who meets the definition of dependent under the qualifying child rule. Okay, it can be their own child, it can be stepchild, it can be legally adopted. Foster child means what? If a person is going to have a child through some government legalities. Okay, there are some foster homes from where you are being provided a child to taken care of. Okay, the child is living with in your house, you are paying their education expense, you are paying their food, living expense, so that is a foster child. You can consider that person as a dependent. Okay, brother or sister can also be a dependent. Descendant of one of them, descendant means, I'll tell only one example: child, grandchild, child of a grandchild. This sequence is called as a descendants. The lower sequence, the lower hierarchy of the family tree is your descendants. Ascendant means the higher hierarchy, means your parent, grandparent, parent of a grandparent, that is called as ascendants, ancestors, right? We call it as ancestors. So all the descendants will be considered in your qualifying child. This who meet the definition of dependent under qualifying children rule. Just in the next scenario, okay, we are going to understand the definition of qualifying child and qualifying relative. Qualifying child, there are 4 criteria. Okay, today you can go through this criteria. Tomorrow when we'll start the session, probably it will be easier when you once read it and come in the class. And there are some additional rules also along with the 4 conditions. And there are stepwise manner to understand this. If this is going to fulfill, if all the steps at the end are fulfilled, then only the person will be considered as a qualifying child. Or if the person is not fulfilling the qualifying child criteria, you can consider that person for a qualifying relative criteria. Okay, clear guys? So for HOH status, please remember the person can be a qualifying child. The person can be a mother or father who can also live at any other location. They are not necessarily required to live with the taxpayer for half of the year. They can live at any other location, that is fine. Second thing, along with this too, the person should be maintaining the home for at least half of the upkeep of the house. Means this upkeep will include rent expense, mortgage, interest, property tax, insurance, utility, all home related expense, including food consumed in the home. Whatever is the total expense for maintaining the home, the taxpayer should be incurring at least 50% of the cost out of his pocket to consider himself eligible for a HOH, head of household status. Clear guys? So 2 criteria you will see everywhere. One, you will see the filing state, the marital status criteria. Second, you will see whether there is a dependent on the return or not. Third, you will see that household expenses are incurred by him or not. So 3 criteria you need to keep in mind for QSS, HOH. For MFJ, single and MFS, it's very easy to remember. Just marital status you have to check. But for QSS, 3 condition you have to check: marital status, okay, dependent criteria, and the expenses which are going to incur for the household. Clear guys? Now dependent rule, just like qualifying child, we have a dependent relative also. Let's say you are taking care of your grandparents, you're taking care of your brother, sister, aunt, uncles, nephew, niece, as well as step parents, parent-in-law, sister-in-law, brother-in-law will consider as a qualifying person for the definition of HOH, dependent status. See, if any one of this you are going to have a dependent, but you don't have your own child as a dependent, you can't go for QSS status. But the other option is you can go for HOH status. Okay, a dependent relative other than father or mother must live with the taxpayer. Okay, cousins, foster parents, and unrelated do not qualify. Please remember this thing. Your cousins means what? Your fathers, brothers, fathers, brothers, son and daughter. Those are your cousins. That will not come under definition. Yes, but your brothers, daughter and sister are your nephew and niece. That will come into picture. Okay, please understand the hierarchy. Like in India, we are good about understanding the family tree, right? So please remember that family tree in your mind. And the last line is important: cousin, foster parent, and unrelated dependent who are not related. Okay, your friends can't be your dependent for the purpose of HOH status. Clear, guys? Any question, anyone? Once you revise this thing, then only you'll able to recapture the things. Those who are attending from the previous batch, for them also I'm suggesting, even if you're attending it twice or thrice, my lecture is enough only once. Okay, keep revising on your own, keep a self-study, self-paced mode on while doing the EA course. Just listening to the lectures will not work. Do a self-study, start solving the MCQs, then you'll able to understand how to handle the paper, exam papers at that point of time. Okay, just listening the things will not work. And to new students also, this is your second day. Yesterday the topic which we did, anyone has went through the topic? No, right? You didn't get time. But today it has been accumulated to whole 10 pages. Yesterday we did 5 pages, today we did 5 pages. Tomorrow again we'll do 5 pages. How you will read all the 30 pages together at once? Okay, so go through the lectures, go through the revision on the same day only. Don't put it to the next, don't postpone it to the next. Okay, so I'll keep the session till here for today. Go through all the criteria, prepare a chart if you need, prepare your own notes from based on this, and tomorrow we'll start with the dependency status of qualifying child and qualifying relative. Okay, so that's it for the day, guys. We'll meet tomorrow again, same time, 7:30 a.m. Thank you. Have a good day. If you have any question, let me know on WhatsApp chat.
Thank you, ma'am.
Thank you.
Welcome. Bye.
Thank you.